Ladies and gentlemen, good day and welcome to the Ramco Cements Limited Q4 FY22 results conference call hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Kripal Manyar from ICICI Securities. Thank you, and over to you, sir.
Thank you, Lizanne. Good evening and a warm welcome to everyone. On behalf of ICICI Securities, we welcome you to the fourth quarter and FY24 earnings call of the Ramco Cement Limited. On the call, we have with us Mr. P.R. Venkatramarajah, CMD, Mr. A.V. Dharmakrishnan, CEO, and Mr. S. Vaidyanathan, CFO. At this point of time, I will hand over the floor to management for their opening remarks, which will be followed by interactive Q&A session. Thank you, and over to you, sir.
Good evening, everybody. This is Venkatramarajah, Managing Director speaking. Warm welcome to all of you to this earning calls of Ramco Cements for the financial year 2022. And I'm sure all of you have already seen the results which we have posted in the website. And during the year, just to give you highlights, during the year we had the sale of 11.05 million tons compared to 9.98 million tons in the previous year, which is 11% growth in volume. The share of premium products have improved to 22% in the current financial year compared to 18% in the previous year. And the utilization rate for the year is also 80% as against 75% in the previous year. The sales volume could have been better because the brand pull because of premium products has improved quite a bit. But due to the impact of the COVID lockdown in May 21 to June 21 in the south, and due to heavy rains and cyclones in Q3 in the south and east markets, we could not improve the volumes more than 11%. The cement prices have been volatile throughout the year, and during the year the company generated wind power of 23.25 crore units as against 21.41 crore units in the previous year. This was an increase in wind energy by about 9%. We are happy to share that the net revenue of the company has crossed 6,000 crores mark during the year. To be precise, the net revenue is now 6,011 crores as against 5,300 crores in the previous year, with a growth of 13%. The EBITDA for the year is 1,314 crores as against 1,500 crores in the previous year, which is a decrease of about 17%. The blended EBITDA per ton for the year has also reduced to 1,190 as against 1,586 during the previous year. And the EBITDA margin in the current year is 22% as against 30% in the previous year. As you all know, the main reason is that the cement industry could not pass on the cost increase of petcoke and coal to its customers fully. You're all aware that the average petcoke price has actually doubled in the financial year 2022, and in addition, the diesel prices have also increased by 20% during the year, which has increased our logistic costs. Our operations of our waste heat recovery plant, which is around 27 megawatts in Jaintipuram, has helped us offset the power cost a bit. And in Kurnool, our new project, the trial production for clinker is ongoing. With this, the clinker capacity for our company has gone up to 13.65 million tons per annum. The cement grinding facility and the 6 megawatts of WHRS in Kurnool are expected to be commissioned in June 2022, June or July. After that, the installed capacity of the cement will go past 20 million tons per annum. And the balance 6.1 megawatts of waste heat recovery and 18 megawatts of thermal power plant will be commissioned in March 2023. During the year, the company has incurred 1,816 crores towards capex. The company's gross debt as of March 2022 will be 3,930 crores. The average cost of borrowing for the year has reduced to 5.54% as against 6.59% in the previous year. It is also proposed to reduce debt by about 500 crores in this financial year, 2023. With this opening remarks and highlights, I'd like to hand it over to the coordinator for the question and answers.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Girish Chaudhary from Spark Capital Advisors Private Limited. Please go ahead.
Hi, thank you. Just wanted to understand the volumes better. This quarter we saw a decline of close to 0.6% YOY. But if I look at the absolute volumes, they are down even below pre-COVID quarter, which is 4Q FY19. You sold around 3.3 million tons. So, and then in this period, you have added capacities as well. So, what explains this volume performance? If you could give us a better understanding in terms of region-wise where we have seen pressure. Yeah, that's my first question.
Last year, the last quarter of 21-22, we had heavy monsoon in Tamil Nadu, Kerala, and Andhra Pradesh, even till the month end of January. Okay, to that extent, the sale is affected in southern part of the country. Also, in east part of the country, the prices were so low, so we didn't want to incur loss, so we cut down our production in the month of January. So February, March, we are able to dispatch a good volume. In fact, January, our volume touched almost 12.5 lakh tons.
I mean, March,
almost we touched 12.5 lakh tons.
Okay. So this quarter you have sold lower volumes in East because of the pricing. Is that the understanding right?
Only in the month of January and early part of February. Then we picked up our sales in the East also.
But general over a longer time frame, like since 4Q FY19, we have seen a volume decline, right? And then we have added capacities also. So just wanted to understand this slightly better. And then how should we look at this in the coming year?
So coming year, we are expecting, in 23, we are expecting volume growth of minimum 12 to 15%.
Okay. Got it. Second, in terms of the fuel cost, as per your presentation, your 4Q blended fuel cost was around $199. So where is this currently? And then based on this, how much inflation we can expect in the near term, let's say in the coming 1 to 2 quarters?
See, I can't give long-term view on fuel prices, but the current prices will be around $225.
Okay,
some shipments I book for $210 also. So, but beyond that, I can't give you any guidance.
So around 10% increase in the blended fuel.
I can't give it. It may come down also drastically. I can't give any guidance on the fuel prices because it is very volatile.
Okay. So just the last question on the pending.
Even if you see the index, sorry to interrupt. Even see the index. January the index price was 146. February the index price was 177. March 248. April 176. May 242. That is the level of volatility you can see. So it is very difficult to give you any guidance.
Got it. So lastly on the pending capex for FY23, and where do you see your debt picking up?
As our chairman mentioned, the debt is picked out. This year definitely we are expecting repayment of some loans. The debt will be reduced by 500 crores against March end debt of 3,930 crores. So also the short-term debt, the working capital loan also gone up by 185 crores. Definitely, we are making all the efforts to reduce that also by 200 crores. So debt reduction of 500 crores is definitely possible.
And in terms of pending capex for FY23?
Pending capex will be 1 second. Will be 1,350 crores next 2 years. Maybe around 600 crores will spend for the capex.
Okay. Thank you, sir.
Thank you.
Thank you. The next question is on the line. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thank you, sir. Sir, first, a couple of data points. You mentioned the premiums are 22% for this year. So what was the number for fourth quarter?
Premium products.
Sorry, fourth quarter exactly, I didn't take the number. The fourth quarter should be around 25-26%. But it will approximately, I'm telling, I don't have the number right now, but year as a whole only I taken 22%.
Yeah, I understand, sir. No issues. Second is, sir, lead distance for fourth quarter, trade, non-trade mix. So that last time we said in terms of the south, state-wise also, so and the east. So is it possible to share for fourth quarter?
The lead distance is around 326 kilometers for the fourth quarter.
Okay. And trade, non-trade mix?
Trade, non-trade is around 72-28.
28. So the numbers last time we said in terms of the south, particularly in the state-wise also we said, and the east was around 55%. So what was the number for fourth quarter, sir?
55%. No, where is question 55% the east?
So what's the number for east trade, sir?
East trade you are asking. East trade is around 50, same percentage, 55 to 60%.
Okay, got it. And in terms of the price increase.
East as far as the trade or non-trade is concerned, in fact, sometimes non-trade gives better realization. So it all depends upon realization. That matters a lot whether the trade.
Okay, got it. And in terms of the price increase, so how much we have taken a price increase in south, east, post March, and if possible in terms of the state-wise also, if you can share, that would be great.
Oh, there is a lot of volatility. The price goes ups and down. So the exact numbers I can't. Even if I give it, will be misleading because the price goes up by 1 week, then comes down by 1 week. But east the price are holding. South, okay, some market the price are holding, other market the price are very volatile.
But
average you can take around 10 to 15 rupees price increase in the south and around 20 rupees price increase in the east.
Okay. I understand, sir. For you, it is difficult to predict in terms of the fuel cost. The kind of a volatility is there. But in terms of the last time we mentioned that we will start increasing the inventory. So now, in terms of the coal, petcoke, what kind of inventory are now we carrying?
We have for 5 months. Whatever in transit and stock together, we have for 5 months commitment.
Okay. And just to clarify in terms of the date, 500 crore reduction when we are saying, so that includes the working capital 200 crore reduction also, or it is
both together. Overall debt I mentioned to you.
Okay. And in terms of the further expansion, previously we are mentioning that in Karnataka and Maharashtra, so we were looking to even finalize the
the
land
capex
also.
includes one grinding unit in Karnataka.
So how much the size and when we'll start and what would be the capex?
It will be around 1 million ton. The capex will be around 300 crores, 300 to 350 crores.
So that we will start now, and so it would be.
You take minimum 6 months to start.
Okay, so in FY24 this will be added. 1 million ton grinding capacity will be added.
Yeah. Sorry.
FY24.
FY20. Yeah, FY24.
Yeah, by FY24 it should be up and running.
You're right. It will be added. Yeah.
Okay, but Maharashtra, nothing, no plan to add.
We have plans, but we are yet to finalize the place. We have plans, but we are yet to identify a nice location.
Okay.
So also, I'd like to mention at this point of time, we also won one limestone block in Karnataka at very cheap base price. Base premium, yeah.
Any number you want to put? I understand you said a cheap price, but anything?
25.1%.
25.1% of the
base price. Premium of 25%. See, normally the premium goes when up to 100 to 160%. We got premium of 25.1%.
So once we start operating this mine, so in terms of the royalty, so what would be the number that will come? So including this 25%, what kind of a royalty per ton?
80 plus 415 plus 25%. 80 plus 415 plus 25%.
Okay. Got it, sir. Thank you, sir. Thank you very much. All the best.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sumangal Navita from Kotak Securities. Please go ahead.
Yeah, thank you for the opportunity. So on the inventory of the coal side, you said we've already have visibility of 5 months. Part of it is in our inventory and part of it is in transit, right? Is that the right understanding?
Yes.
Yeah, you are right, because some shipments are in transit.
Okay, understood. And so given that we've already, large part of the quarter is already gone and we have such huge visibility of inventory, is it possible to share, because we're not asking prediction on the coal prices, but how will be the fuel cost move in 1 year, because almost 20 days of the quarter is...
Sorry, you are breaking. Your voice is not clear.
Is it better now?
Cost of fuel cost.
Hello? Is it better?
Yeah, it is better now, yeah.
Yeah. So my question is, given that we have such significant inventory and commitment and good part of the quarter is already gone by, is it possible to share, what sort of fuel cost inflation are we witnessing at least in 1Q? They're not asking any forecast of thermal coal prices or petcoke prices, but at least in 1Q, what sort of inflation, can we guide something on that front?
See, for Q1, I'm expecting our petcoke prices, which we use almost 80-85% for our clinker production, will be around $225.
Okay, versus 4Q at?
4Q will be around $175.
Understood. That's helpful.
99.
And what would...
Sorry, it's $190. Sorry, $190.
Okay, $190. And remaining will be thermal coal at what versus what?
So thermal coal we are using only for power. This one is very small because we are also getting waste heat recovery. Only for power generation we are using. Fuel almost we are using 100% petcoke. Okay,
understood. And second, on the pricing front, what we hear is in 1Q, the pricing in South versus other regions. So what could reason, given the massive cost inflation, why is it prices are not getting absorbed in the market?
Sorry to interrupt, sir. Your voice is breaking up. We're not able to hear you clearly.
See, with so many Concall, you will be understanding now. Yeah, nothing I'm going to add new. See, you might have attended so many investor calls. You will be knowing better than me.
All right. Okay, sir. Thank you and all the best, sir.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and one. The next question is on the line of Brijesh Sia from HSBC. Please go ahead.
Hello, sir. Good evening. I have two questions. So the first one is on the pricing. I understand don't have much visibility about how the price is going to be behaving in the coming quarters or months. But looking at today, if you were to do your maths, how much price increase you require just to cover up your cost inflation?
Yeah, at least 40 rupees
Per bag.
per bag.
200 rupees per bag. 800 rupees.
And now looking at the volume side, sir, and I think this quarter as well we had some rains and all. If you can give how things are panning out as we speak for this quarter, are we looking volume growth to accelerate versus Q4, or we are kind of at level with Q4?
Yeah, April, May, our growth is decent, very decent compared to last year. And April we have done almost 1 million ton dispatches. May it will be better than that. And this quarter definitely will be doing 3 million plus we definitely will be doing.
All right. And last one is, I see in the presentation you mentioned there that 71% of your electrical energy required for clinker production will come from green energy. I wanted to understand, where do you use electric energy in clinker production?
To run the kiln, everything, raw mill, kiln, everything should be run only by electrical energy. Na? Electricity consumption. What do you mean by electric consumption? No, crusher, raw mill, coal mill, everything should run on only electricity. Na?
Okay. No, I thought the kiln is anyway run with thermal fuel, so this 70%.
No. Thermal plant, right? See, thermal plant to the extent, thermal plant usage will be reduced. What we mentioned, see, previously, for example, I didn't have waste heat recovery before. We used to run only thermal plant. Now with waste heat recovery, to that extent, we don't run the thermal plant. We produce less from the thermal power plants.
Okay. This is primarily you are referring to the waste heat recovery here.
Yeah, waste heat recovery and also windmills. See, most of the windmills in Tamil Nadu was under sale to the board. Now I converted into captive consumption.
Okay. All right. Got it, sir. Thank you very much.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and one. The next question is on the line of Parthiv from Trackcom Stock Brokers Private Limited. Please go ahead.
Thank you so much for taking my question, sir. I just want to get a sense on your FY23 volume guidance for your premium products. As I understand, your premium products would surely be doing a lot better EBITDA by ton. So in FY23, as compared to 22% you did in FY22, what are you expecting your percentage of premium products?
See, in 21, FY21 was 18%, 22 it was 22%, 23 we want to increase to 30%.
30%. And if I may ask, just in terms of pure EBITDA by ton front, say this particular FY23, if I'm not wrong, you did 1196. So if I have to just segregate the share of premium products, what would be the EBITDA by ton of that?
So EBITDA per ton cement will be at least definitely some 200 rupees, 200 to 300 rupees more. See, more than the price, it will give good brand image. And also it give more number of customers because we are expecting good volume growth also.
And also, sir, what I want to understand is that we are in a very tough inflationary environment. Maybe you could correct me, but in your entire history, probably this will be one of the toughest times. And what we are also seeing that government is also lobbying very strongly to ensure that commodities like cement, steel don't go up to unprecedented levels. So just want to understand, assuming that if the current run rate of the fuel cost stays the same and your cost rate stays the same, is it safe to assume that in FY23 it will be very difficult to even surpass the 1200 EBITDA by ton, or it depends on some other factors?
It all depends upon, again, fuel prices. If the fuel prices I told you, it's so volatile. Suppose it comes down to $140, so definitely 1,200 plus is definitely possible. It all depends upon again fuel prices and see, like they reduce the diesel prices by almost 8 rupees and petrol prices by 10 rupees. If they reduce more, and it is possible. Also, sorry, the finance minister is agreed to announce some benefits on logistics, which I'm yet to know about it. See, with all these things, it is possible.
And so my last question is regarding our investments in Link Logistics. What is the current status of that company, and what is our exit plan from that company?
See, the Link Logistics, now they change the business model. See, previously they were doing last mile delivery. Now what they do is they are becoming super distributor for many FMCG companies. So tech-based. And they have prepared nice platform so that the FMCG companies can distribute their various goods to the Kirana stores. So this one is there will not be any more investment from Ramco Cement. It will be like investor. If the value goes up, if there is any secondary, if any investor comes, we will be selling that. That will be not immediately. It will take time. That whatever investment we made today, that will remain. It will not increase.
And I do assume, sir, it would be a company which at current juncture would be burning cash. So is it safe to assume that going ahead, Ramco Cement as the parent will not infuse any further capital and look for external investors?
We will not put any, not even single paisa more than what we invested.
Fair enough. Thank you so much, sir. All the best.
Thank you.
Thank you. The next question is on the line of Kamlesh Bagmar from Prabhudas Lilladher. Please go ahead. Kamlesh, your line is in the talk mode. Please go ahead.
Yeah, sir. On the capex side, sir, we have mentioned that there is roughly around 1350 crore of pending capex. So I believe it's on the growth capex or the new capacity expansion. So can we assume 300 odd crore of maintenance capex in addition to that on a yearly basis?
No, it includes both. It includes both operating capex as well as new. I was telling to you new grinding unit in Karnataka and also balance capex expenditure for Aranagar as well as Jayendipuram and Kurnool.
So, sir, this 1350 is inclusive of how much of maintenance or sustenance capex in that, sir?
Maintenance capex would be 120 crores per annum.
Okay, so around 260 crore is included in that.
Yes.
Yeah.
250.
Okay, got it, sir. Thanks a lot, sir.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question may please press star and 1. The next question is on the line of Parati from Millennium Mams. Please go ahead.
Good evening, sir. Sir, I would like to understand the East market since everyone is doing capex in the East, but the prices are still relatively weak. Is it not contradictory? And will the consumption go up in the East, and how do you also see the price moving in the current year, that is FY23?
See, the price in the East in the first quarter is much better. It was very weak in the last quarter of last year, but the prices in the first quarter is healthy, and the demand is also much better in the East now. So, the East, if you really take Orissa, Bengal, and also Northeast, a lot of capital expenditures, infrastructure spending is, the government is also concentrating a lot of infrastructure spending. So, we are very bullish on East market.
Okay, thank you, sir.
So, merely because the prices was weaker in one quarter, we can't judge the market is bad.
Okay. So, we should expect the prices to get better from here on?
Yeah, prices even today is better.
Okay. Thank you, sir.
Thank you. Ladies and gentlemen, a reminder to the participants, anyone wishing to ask a question may please press star and 1. Please note that this is a live reminder. There will be no reminders post this. The next question is on the line of Shravan Shah from Dolat Capital Markets. Please go ahead.
Thank you, sir. Sir, continuing the previous participant's question, so even if one assumes that the UltraTech, the significant capacity will be coming up in the third and fourth quarter in the east, despite that, we see, I understand the demand is likely to remain robust, but it will not have a impact on the pricing.
See, the east, you really see Bengal. See, Orissa, Bengal, and all these places, there is no grain, there is no fresh limestone, there is no limestone is available, no integrated plant is going to come there. It is only grinding unit. The cement which is already transported there is to be ground inside. See, the fresh capacities are coming only in Chhattisgarh, and clinker capacities. Okay, whatever fresh capacity is coming up, and you see the growth rate, and it almost, definitely east will grow by minimum 15 to 20% the current year. So we are not seeing any major problem in the east.
Okay, got it. I thought I have a complete understanding in terms of the volume growth in east. I am just trying to understand that the way the UltraTech is putting up the capacity sizably in this third and fourth quarter. So will it not
that is
impact
fine. They are putting up only see, they are not putting up in the east exactly. The Bengal east and northeast, no cement plant can come up. No integrated cement plant can come up.
No, I am saying the grinding unit particularly. So in terms of
grinding, what you mean by grinding unit? Already whatever cement they are transporting there, instead of that they are putting up grinding unit, they transfer clinker to reduce the cost. Nothing else. The putting up of the grinding unit is not going to increase the capacity.
Okay, got it, sir.
For example, I can transport cement from Jayantipuram, Andhra to West Bengal, by rail or by ship, whatever may be. Means 100%. Suppose I'm selling blended cement, 100% I'm transporting. I'm incurring transport cost. Instead of that, if I put grinding unit, it is enough if I transport 60% of the clinker there, source 35% fly ash there, 5% gypsum locally, and sell. To that extent, 35% logistics cost I can save. Merely because of that, my sale in Bengal is not going to go up. I am replacing the sale from Andhra to Bengal by putting up grinding unit inside so that I can reduce my raw material cost as well as logistics cost.
Got it, sir. Thank you.
Thank you. The next question is on the line of Amit Madarka from Axis Capital. Please go ahead.
Yeah, hi, good evening. So I just wanted to understand on the Kurnool plant that you've commissioned, like what could be the ramp-up schedule of that plant?
See, the clinker is already commissioned. See, we are waiting for the. See, originally what we thought, when there was a pandemic problem, all these things, the manpower was less. We thought we will focus on commissioning clinker. Then we transfer the clinker to the east as well as to Chennai grinding unit, so that we can at least the clinker can come fast. But today, because of the cost, because of the fuel cost, definitely mere transfer of clinker may not be viable. So we are concentrating on the commissioning of the cement plant also. Definitely the cement plant will be commissioned before 30th June. 100% it will be commissioned. Also, what we are doing, our Mathodu, we have a small plant in Mathodu which was closed down 2 years back. There also we are reviving our cement grinding capacity. Already we revived. We are waiting for the approval to come from the Karnataka government, which is expected in 2 to 3 days time. So the day, see, from 1st July, definitely we can expect 30 to 40% capacity utilization.
Okay, 40%. And let's say by end of the year, like could we go to 70% or so?
Possible.
Right. And also on the Jayantipuram clinker, which you had expanded, like what would be the utilization levels right now?
Right now around 80%.
Okay. So just to be clear, you said that now you are back into east as a market. So it was only a temporary step that you took of not selling in east in January, and now you don't.
No. That is why telling it is only one month.
Yeah.
Not all the time. It's only 1 month.
Okay. Thanks.
In the month of January.
Okay, understood. Okay, thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Brajesh Sia from HSBC. Please go ahead.
Yeah, thank you again. So just one on the carbon emission. The slide says you have kind of achieved a good number for 2022. You reduced it to 742. But if I look at the Indian players, possibly your number is slightly on the higher side. Could you please explain what could be the possible reason for the divergence? And a second part of the question is,
Sorry, what is the first question? Sorry, I would not listen to you.
CO2 emission per ton. CO2 emission per ton. So it's around 742 kilogram as I see in the slide. And if you look at and compare with the other Indian companies, possibly that number is your number is on a higher side. So if you could explain what could be the possible reason for it.
Basically, if you see some of our plants, on a kilocalorie consumption.
Higher emission.
You're talking about emission or?
Emission.
Yeah, emission, that's right.
Emission. Can you repeat the question again? Sorry, I missed it.
No, I see it's around 742 kilogram per ton, but if I compare the other cement companies, it'll be around 500, 550 in that range. So if you could just give us a little more flavor why that number is slightly higher.
That I'll have to come back to you. We don't know.
Okay.
No, I'm not prepared. See, I'm not prepared for it.
That
My technical chief is also not in station.
So that we'll have to come back to you.
Yeah, sure. And now going forward, as we see the fly ash and slags are kind of a scarce commodity as obviously in developed markets it has already happened. It's going to happen in emerging markets in some time. But what's kind of your CO2 path and what are the kind of mitigating plans you are putting in place where you could kind of improve the blending, hence reduce the CO2 emission?
No, we are able to get sufficient quantity of fly ash as well as slag because the power capacity are going up. The steel companies, they are also increasing the capacity. So availability of slag and fly ash is not a problem at all. See, only the cost may be a problem. They may increase the price, but availability was never a problem. For example, Vizag, we have in a Vizag steel plant nearby, so we can get any quantity of slag as well as fly ash from there. Also, NTPC plants are nearby. And also in our, see, that is why we have put up our thermal plant, we put up our grinding units in such a way they are all near to the thermal station. For example, in Tamil Nadu, there are three important thermal stations. One is in Neyveli, that our Aranagar plant is very near to Neyveli. And, very near to Tutukurin. And we have another place called Neyveli. Our Adathi Rariulu is very near to a Neyveli plant. Then we have grinding unit in Salem, which is very near to Metro thermal station. And we have grinding unit in Chennai, which is very near to Ennore. There are three North Chennai, the NTPC plants. In Andhra also, Vijayawada is a big thermal plant, where our plant is very near. Vizag, there are NTPC plant, we are very near. Orissa, we are very near to many steel plants. Slag is available in plenty. And in Calcutta, our plant is on the bed of the thermal station itself. So the availability of fly ash or slag is not a problem.
Okay. Understood, sir. My question was around the new cement, which is kind of limestone, calcine, clay. Whether you have any kind of R&D going on to?
Yes, we have lots of R&D going on. Yeah, we have.
All right. Thank you.
Thank you. The next question is on the line of Ronald Sioni from Sharekhan. Please go ahead.
Good evening, sir. I just wanted to understand on the demand front, like as we have seen recently, government looking at lowering the cost inflation through soaps to steel and some of the plastic products and everything. So borrowings are expected to rise. So over the next 4 to 5 years, how do you see the government infrastructure related spend? Whether there is a possibility, that there could be slowdown in infra spend, and vis-a-vis, comparing to the housing segment, like housing segment has also been doing exceptionally well. So how do you see the real estate market, especially in the southern region, the outlook over there?
See, everywhere when I talk to HDFC Bank and other housing finance companies, they are telling highest ever the disbursement made in April, May. So to that extent, the housing demand is very good, as rightly told. Also, whatever guidance is given by companies like DLF is also very encouraging. So the housing demand and commercial space demand will go up. The government spending, especially in road construction, the government is definitely in all our areas. We are getting orders from the infrastructure companies. So the government spending will go up. In fact, they are doubling up their expenditures everywhere.
Okay. And as you commented on the eastern region that there will be grinding units coming up and it would help lower the cost. So is there a possibility, more grinding units coming up and the companies there becoming a little bit more competitive and that may result, lower prices for eastern region going?
So lower price does not mean that they are going to reduce the cost significantly. What I am telling, apart from the cost, it may be advantages in the logistics point. He can service the customer better. See, suppose if you don't have the grinding unit inside, you have to remove the cement in rake, you should have stock points and all these things. Whereas if you have unit inside, to that extent you can reach the customers at any point of time. So the cost is not going to reduce significantly. Definitely there will be cost reduction. It's not going to be reduced your cost significantly. But also you have to spend for the grinding unit. The grinding is not going to come free of cost. You have to spend for the grinding unit. There is a capital cost also going to be there.
Oh,
I am telling variable cost may come down, but fixed cost is going to remain same. So the overall cost will be same. But you can service your customer better.
Oh, thank you very much. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sagar Parekh from Deep Financial Consultants Private Limited. Please go ahead.
Yeah, hi. Sir, just one question. You said that you require 40 rupees per bag hike in cement prices. So just wanted to check to reach what kind of EBITDA level? To reach FY22 or full year or?
Average.
So about to reach 1200 rupees, right then?
Around 1300 rupees.
1300. Okay, fair. Okay, thanks.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. Participants, if you wish to ask a question, you may please press star and 1. As there are no further questions, I now hand the conference over to Mr. Kripal Manyar for his closing comments.
Thank you, Lizan. On behalf of ICICI Securities, we would like to thank the management of Ramco Cement for providing us this opportunity to host the call, and thanks all the participants for joining the call. You may now conclude the call, Lizan.
Thank you, Manyar. Thank you, Manyar, for your coordination. Thank you. Thanks a lot.
Thank you. Ladies and gentlemen, on behalf of ICICI Securities, that concludes this conference call. We thank you for joining us, and you may now disconnect your line.